Hello, everyone, and welcome to the show. My name is Chris Alemo, and I am an amateur investor. This podcast is my open source journal of everything I learn about investing and wealth management. I'm here to explore the key concepts, market dynamics, and investing strategies that will assist you on the path towards financial independence and financial literacy. My mission is to build us from amateurs to experts. All suggestions are my own, and I recommend that you should do your own research before taking any investment advice. See you in this week's episode. I hope you enjoy. All right. How's it going, everyone? This is episode 76 of the Amateur Investors. I am pleased to be joined by Dr. Jeff Ross. Jeff, thanks for coming on the show.
Thanks for having me, Chris. I'm really excited to be here.
Yeah, so I know I've heard your story a bunch of times because we worked together a lot over the last couple of months, but I guess for my audience, can you give yourself a little bit of a background of your career as a doctor and then segueing into Vailshire Capital, and we'll start with that.
Sounds good. I'll try to keep it. I'll try to keep it quick. So way back in the 90s when I was in college, I had to decide between my two passions, investing or medicine. And so I chose medicine. So that put me down the pre-med route in college. And then I went to med school and residency. I ended up being a board certified diagnostic radiologist and fellowship trained interventional radiologist, which is someone who does image guided, minimally invasive procedures. So got out of training back in 2008, and my family and I moved to Colorado Springs. About a year into private practice, I remembered my love for investing again. So I actually started a blog back when blogs were cool, teaching people how to invest on their own. And I did that for maybe a year or two. And then I got picked up by an outfit called The Motley Fool. And then another one called Seeking Alpha, where I just used to write investment advisory articles for people talking about stocks. I was just kind of a value oriented stock picker back then. When I had enough of a following, I had sizable amount of people that said, "Hey, I love your style. Would you mind investing my money for me?" And I was like, "Oh no, I'm just a doctor. I just do this for fun. It's kind of a side hobby that I do." But enough people asked me that it started to put a little seed in my head, like, wow, what if I actually did this for a living? I really like doing this. I just kind of love, I love counseling people, whether it's about their health or about their wealth or whatever it is. But those two subjects are so emotional for people and so important to people that there's a lot of overlap between the two. So long story short, I looked into what would be the best thing for me and my style, for my personality. I'm kind of like a maverick who just I just do what I think I should do. Don't really care what you're supposed to do. So I knew like mutual funds and most financial planning wouldn't be for me. I'm not a salesman. Don't want to sell people life insurance, things like that. I just don't like any of that, which is fine. Fine that people do that, but it's not for me. So anyways, I decided to start a hedge fund and then a registered investment advisory. And so Vailshire was founded in 2013. I started the fund in 2014. And later started this registered investment advisory, managing people's IRAs and brokerage accounts and things like that a little later in 2014. And I was doing that as a side gig to my medicine. So I was a full-time doctor and really busy. I was on call every fourth night. I mean, my days were killer. It was a killer schedule. And then on top of that, I was running Vailshire kind of on the weekends and the evenings. I did that for several years and then got my MBA in finance in there just to, just to add a little credibility to my background as just being a doctor. And then finally back in 2021, so just like 6 months ago, I was able to retire from medicine. So back in October of 2021, I've been doing just Vailshire ever since then, and I'm just having an absolute ball.
That's awesome. I love the tidbits that you say about, you're trying to look out for people's health as well as their wealth. And a lot of times I'd say they commingle because as you know, many people that are kind of beaten down in the last 2 years are the people that are the lower and middle class, or at least the shrinking middle class, as I like to call it nowadays.
Yep. Mm-hmm.
So I guess when you were starting your fund, obviously you're doing the blogging for obviously getting picked up by Seeking Alpha and Motley Fool. I know my dad follows both of those pretty closely, as well as now Bitcoin with me working at Bitcoin Magazine. But nice. I guess out of curiosity, so a lot of your coworkers, were they asking you for investment advice? Like I meant your doctors or nurses or friends while you were there. I'd love to pull on that thread.
While I was there, I had a couple friends that we talked regularly just about investing in general, and they kind of went down the Bitcoin rabbit hole with me when I did. In fact, so before I was a Bitcoiner, I have to confess, I was into the altcoin world, right? I was a gambler, a speculator. I actually got pulled into this space because of the Sharpe ratio, because of the risk-adjusted returns that were kind of off the charts with Bitcoin, and then back, way back in the day, the Ethereum and the other garbage things. That drew me in, right? Because you could get way better returns than stocks and bonds and blah, 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 these other things that we traditionally invest in that asset manager side. So that's what got me into it. And then I would go along with my colleagues and we'd be talking about that. And they knew I was kind of the financial guy back then. And I wrote my articles and did my things and I started my business. So yeah, we would talk about stocks. And for the most part though, I always kind of try to keep a little bit of a wall between friends and colleagues, and I'm just like, I'm not trying to sell anything to anybody. I don't want you to be my client just because you feel like you should. I only want people to be my clients because they trust me and they want me to manage their money. So when it wasn't until when I quit medicine officially, or when I was on that path to retirement, that a lot of people came on board, physicians and lots of nurses and techs that I used to work with. I have a lot of those as clients, and they just trust me. They know me as Dr. Ross. They trusted me when I was a doctor, and they trust me to manage their finances now. So it's a real privilege to be in this position to manage such important things for people. So I'm thankful for it.
That's awesome. Yeah. And I definitely think, especially from your circumstance, it's tough to mix business and pleasure, or I guess business and business is kind of the way that
Right.
it looks up.
Right.
But that's awesome. I guess now let's go down the rabbit hole of how you got into Bitcoin, when you first heard about it. I know you said the alts kind of pulled you in. I don't know if it was an alt that pulled you in first or Bitcoin. And then, ultimately as your path through Bitcoin, as you've seen it, if you don't mind.
Sure. No, that's great. So I like to tell people kind of jokingly, I'm the class of 2016, but I got held back to the class of 2019. So Bitcoin was the first, crypto that I got into. And then I sort of went down so I didn't know much. This is before Bitcoin Twitter really existed. There weren't groups of people talking about it and sort of teaching each other like we have right now. Like, what are the differences between these things and why is one important, and blah blah blah. So I was sort of on my own trying to figure this out. Honestly, I didn't know who was going to win. So this was back when we were trying to figure out what the next world's reserve currency is going to be. What will be the world's best internet money? And that was between Bitcoin and, as we all know, like Bitcoin Cash, and then BSV and Litecoin came around. And then there's, do we want more privacy? Monero, Zcash. There are all these options. I just had a basket of all of them back then because I didn't know. And I heard people talking about, the block size wars that are more common now. It's easy now to look back and say, well, yeah, obviously Bitcoin was going to be the winner. I think it was hard back then. And there were real arguments. And I didn't, for me being kind of like on the periphery, just a finance guy, I didn't really know which was going to win. And I thought, well, yeah, that makes sense that you'd want bigger block sizes to have more transactions per second. So maybe that's important. But I get the argument too that you want to keep them small so you can have more decentralized nodes, all that thing. And I was like, I don't know what's going to win. So that's where I came from. Basically, I just didn't understand. And then on top of that, the huge tragedy that I did is, so Bitcoin did really well. But as you guys, for people who were in it, remember, 2017, like any altcoin you put any money into just like instantly went to the moon in 2017. And so I was like, and back in the day, it was before the huge, the prevalence of stable coins. And so you basically had Bitcoin as your base pair. So Bitcoin was the original thing that you bought, and then you would trade your Bitcoin for these other altcoins, for Ethereum, for Litecoin, for Zcash, for whatever, pick your thing. And, I had a portfolio of like 50 of them because I had no idea. And it was like throwing darts on the wall, and you just hope something sticks, and everything at that time did well. So here's the tragedy. At the end of 2017 and into 2018, I had made some nice profits. Obviously it was impossible not to make huge gains in that time period. I had sold all of my Bitcoin for all of these other altcoins. So when 2018 hit, the crash happened. By mid 2018, everything that I had owned that was up here had dumped all the way down about 90, 95, sometimes 98%, these altcoins throughout 2018. On top of that, I had a huge tax bill in 2018 to pay for the gains of 2017 when I sold my Bitcoin to buy these other garbage coins. And so it was just a crazy roller coaster experience, right? I was just like, wow, like unimaginable, like price gains followed by this unbelievably terrible crash, and then kicked in the shorts by this huge tax bill to kind of sum it all up. So that's how I was in 2018. I was just kind of like sitting in the dust. Like, first of all, by the way, this had nothing to do with Vailshire. This is just all my side stuff. I didn't have my clients in anything like this at the time. 2019 came around, and I had been listening to, I was an avid listener of Preston Pish's podcast, the Investors Podcast, We Study Billionaires. He, like me, was kind of a value investor. He came from the Warren Buffett style of investing back in the day. I used to be a kind of a stock picking dude for my fund and for my clients. Then he fell down the Bitcoin rabbit hole and took a lot of listeners with him. I was one of them. I used to drive back and forth to Denver, and I'd listen to his podcast. And he helped get me from just kind of thinking of as just some other altcoin kind of crypto verse thing to here's what Bitcoin really is, right? And we all know that if we've been in this space, it's better money. And here's why. Here are all the properties of why this is the world's greatest money and it's going to create a better world. And so by 2019, I was sufficiently orange pilled. I read Safe's book, and that, further helped me go down the rabbit hole and understand Bitcoin at a much deeper level and kind of like a superior monetary basis for the human race. And then I started teaching my clients about it. So then that's 2019 is when Vailshire clients started getting into Bitcoin. And so it first started with, I had my clients who didn't want to have anything to do with it, and that was the majority, and then a small minority of people who were okay with it. And so I started putting theirs in. We just got off zero, got to like 1%, 2%, 3% of the portfolios. And then the cool thing about my position being a money manager, by the end of 2019 and into 2020, I could show my clients, the ones over here who were concerned about Bitcoin and scared of it and things like that, and thought government was going to ban it, all those kind of things they weren't sure about having in their portfolios. I could say, here's a portfolio, a Vailshire portfolio with a little bit of Bitcoin. Here's a Vailshire portfolio with no Bitcoin. Look at the differences. You're super concerned about the volatility. You don't even notice the volatility in these accounts, but look at the difference in the gains and just what a little small allocation to Bitcoin can do. And they were clearly much better, especially as we went well into 2020. By the end of 2020, basically 95% of my clients were all on board with Bitcoin. And then they were all like, how much can we put in? How much can we put in? And so I would tell a lot of the people who got sufficiently orange pilled, I'm like, you just need to get your own Bitcoin. And here's how you do that. So I'd hook them up with Swan. Like, you need to get your own account. You need to learn how to like buy it, hold your own keys, put it in cold storage, all that kind of stuff. That's the route you need to go down. For everybody else who's still over here on kind of the traditional money management side, we just have kind of increasing amounts of Bitcoin in our portfolios. And so I plan on Bitcoin putting me and people like me out of business within the next decade, because at some point, all these things we do because we have a depreciating currency called the US dollar, and every government currency is a depreciating. It's just by engineering status. That's the way it's designed to be, is to depreciate over time. Because of that, you have to look for ways to preserve your purchasing power, whether it's stocks or bonds or real estate or commodities or whatever hard asset you want to put it in. There's this big, everybody's crawling all over themselves trying to find the best way to preserve their purchasing power and hopefully appreciate it over time, which is kind of tough to do when your currency is depreciating so fast. Bitcoin, because it's an appreciating store of value over time, you don't really need to focus as much on these kind of things, and you can become a way more discerning investor. You can think, well, why would I want to give up my Bitcoin to buy that company that's trading at like 40 times sales right now? Some internet company, whatever, whatever company you're talking about, like it really makes you discerning, because you have to decide if you want to part with this greatest money of all time that's appreciating and that will probably outperform almost all of these things over here. Why wouldn't I just sit and hold this? And if I do that, why would I need an investment advisor or a fund manager to manage my funds? So that's my long roundabout story.
No, that's an awesome story. So I guess I have a couple threads that I want to pull on. So I guess to clarify, I guess it's great that you said that it was just your personal funds and you weren't messing with your clients' funds in terms of all these dangerous alts and stuff.
Yep.
Ultimately, did they end up hearing about that story? I mean, maybe now after the fact, but were they concerned with you being a money manager, even for their funds, of, I guess, taking more personal risks, or was this more of an after the fact kind of thing?
That was after that I kind of talked through, and so now I have clients. When clients come to me now, we're all on the same journey. There's a lot of Bitcoiners. This is one kind of slight issue I have, is they're really hard on altcoiners people, but the people who start in, they see these shiny objects that, and right now it's the metaverse, right? And it's NFTs and people can't
Web3 and whatever.
Web3, back then it was, Bitcoin is old tech, and what about these privacy coins, and what about ICOs, and it's always some new flavor, whatever year we're in. And so I get that. And because I came from that, I kind of have a heart for these sort of people. And I'm like, you know what, like all roads lead to Bitcoin eventually. For these kind of people that just have to dabble in that stuff, have at it. I say, speculate on whatever you want, but make sure you save in Bitcoin, because you're going to be forced to at some point. You can do it willingly, or you're going to be forced to when you get wrecked over here at some point. And so, when I teach my clients, when new clients come on board and get kind of excited about Bitcoin, almost the first thing they do is they start talking about all these other altcoins that they could make even more money in, And so we have these conversations. And for me, I get to tell them my own experience, like, hey, here's what happened to me. Don't let it happen to you. You know, if you just have to do this, that's fine. It's a free country. I'm not going to tell you can't do that, you know, but please, please, please save in Bitcoin. Make the majority of all of your savings be in Bitcoin. If you have to speculate, that's great. But, you know, all roads lead to Bitcoin eventually. So.
Yeah, I think that's a great point. And I mean, I'm not a trader. I consider myself a long-term hodler. So I just buy
Nice.
and hold and put into cold storage and forget about. And that just gives me more peace of mind. I know that
Nice.
there is a rare 1% of people that can trade and make more money. But I guess I tell them, like, my advice is look at Bitcoin's gains and try and beat that. But once you take profits, lump it back into Bitcoin always. And that's kind of my advice. I said, you know, not financial advice, but that's what I would recommend. And if you can succeed in that, more power to you. So I guess I want to circle back to 2019. So when you were kind of fully going down your orange pilling journey, it was obviously a very interesting year. I guess the price kind of remained flat. And then ultimately 2020 occurred. Now, I know 2020, there was a sell-off of all major assets, you know, across the board. Obviously, Bitcoin and I'd say other cryptocurrencies, but I don't even want to talk about that.
Good.
But
yeah, let's quit talking about them.
But I guess we just saw all asset classes sell off even more. Bitcoin obviously takes a bigger hit in volatile environments, normally like that. So how did you, I guess, I don't want to say talk down your clients, but obviously if you're getting them in 2019 and then 2020 occurred, it was kind of a black swan event that kind of, I don't want to say hurt a lot of people, but it hurt a lot of people. So I guess, how did you get them out of the fear of like, oh, well, the stock market fell 25 to 30%. Bitcoin fell, I think at the time, like 50 to 60% range, if I'm correct, maybe 70%. So I guess, how did you say, hey, like, you know, it's very bad right now, but look at all asset classes. And, you know, ultimately I see this projecting much, much higher in the near future.
Right. Okay. So it's kind of a multifaceted question. So first of all, going into March of 2020, that's, everybody remembers this is COVID, right? So COVID first hit, the markets were panicking. They dropped. Bitcoin dropped about 50%, like in like a week. It was just insane. And so thankfully, leading up to that, because I'm a macro guy, I had a lot of red flags on my system that was telling me. So we were super conservatively positioned at that time. We were mostly in cash. Some of my, like our most conservative client accounts, we were sitting in like 80% cash, and then I think 10% gold, 10% treasuries. They weren't in any Bitcoin at the time. Some of my clients, we had Bitcoin and we had just very small positions at the time. It was usually like in b.tc, those kind of things. And so yes, Bitcoin is very volatile, and this applies to today. It always applies. And when people are concerned about the volatility, the solution is actually super simple. Keep your position sizes small. If you can't handle the volatility, put 1% of your portfolio into it, right? If you have 1% of $100,000 portfolio, okay, that's $1,000 of $100,000. That can drop 50%. And all that means is your portfolio loses $500. Like, it's literally negligible. You won't really notice it. Like you'll feel it a little bit, but you're not going to be like just devastated by a 50% drop. So if the volatility gets you, it's all about position sizes. If you're comfortable with the volatility of Bitcoin and you don't care, and you've been in it long enough, like we have now and our friends have, you know that it drops 50%, 60%, it drops 85% sometimes, right? After 2017. I mean, that, and it could do it again. It's possible. So we know that, and we're okay with that volatility. We see those huge drawdowns as a chance to actually just stack more sats for our dollars. And that's a fantastic spot to be in. So that's how I am with people. It just depends on where they are psychologically. If they're totally on board with Bitcoin, I'm like, sweet, let's up your position size. Let's go to 10, let's go to 20, let's go to maybe 50%. If you think Bitcoin is going to go where it's going to go, why wouldn't you have 50% of your portfolio? That's, I think, very reasonable. And then for other people who want to go all in, that's a different story. Just because that really affects your whole lifestyle. Like if you're a true Bitcoiner, like, and you got to figure out, you actually have to sell your Bitcoin to live, to pay your living expenses. That's awesome. And I commend that. I'm not quite at that level. I'm like above 50%, but I still have a lot of other things in my other investments that I like doing. So all comes down to position size. If you're concerned about volatility, yes, it's volatile. It's usually more volatile to the upside over time. That's what makes it such an amazing thing to hold for the long term. It's amazing savings technology. So once you're okay with that, the more okay you are, the more you know Bitcoin, the more you own Bitcoin. And that's true for all of my clients.
Yeah, and I think that's a great explanation. Like my podcast, I started as the Amateur Investors. I was kind of into Bitcoin, but I finally went orange pilled. I'd say I'm class of 2020 is when I really first started
Nice.
buying it. And ultimately, I like to consider myself a very conservative investor. I like the whole value investing route. That's why I loved Preston Fish's podcast, the Investors Podcast, and all of that. But I guess I was starting to see, and I got very lucky. In 2020, I got very lucky. So I had a Robinhood account that I was just kind of like, I was trading in that. I was like maxing out my 401k, maxing out my Roth IRA. And this was just kind of fun money that like above my living needs that I was just, let me invest in Penn National Gaming or whatever stocks I had. And like you, I guess I had a very interesting moment of January or February of 2020 where I was setting stop losses. So a lot of my things had ridden up 50%, 60%, and I set a stop loss 5% below what they were currently at. And I remember in, I guess, either end of January or early February, I watched as my whole Robinhood portfolio gets liquidated across the board. Tech, finance, across the board. Everything I had got liquidated. And I was like, something is definitely off. And then ultimately, we learned about the pandemic that struck the whole world. And I was able to just kind of like wait and see. And like maybe by end of March, I started putting some of it back in as I was all liquidated into cash. Then by April, I was kind of more than half my portfolio. And then by June 1st, I had everything bought in back in. Nice. And that was when I was listening to Preston's podcast and he had mentioned in back-to-back quarterly masterminds, Bitcoin. And at first in March, I like blew it off. I'm like, Preston, like I really respect your opinion, but that's not for me. I don't agree with it, whatever, but I still respect your opinion. But when he mentioned again in June of 2020, that's when I was like, okay, I really respect Preston. I've missed something because I've never heard him or his co-host Stig ever recommend something in back-to-back quarters. So that's when I bought a little bit. And then I'd say that was really the start of my journey. And ultimately I've closed down my Robinhood account, flipped it all into Bitcoin. Like I said, I practice what I preach, I'm flipping it into all those other things and doing all that. So I guess from my long-winded question now is, so obviously we're looking at a lot of companies in the S&P 500 or the NASDAQ, even the best companies, the Apples, the Amazons, the Googles, whatever, you name it, the FANG stocks. Mm-hmm. And I would completely agree. A lot of them I would consider overpriced when you look at their price to earnings ratios. And if you do more of a discounted cash flow model or more of the traditional Warren Buffett style investing. So I guess that was kind of my pitch to people about Bitcoin. But I guess I know the question always comes up, like, is Bitcoin a conservative investment? So I guess maybe along that same line of logic, or maybe something I haven't thought of, how would you pitch that to something that's thinks the more traditional 60-40 portfolio, or try and get them off of like, oh, but I like Amazon, Google, and Facebook, and I think those make more sense to me?
Sure. A lot of people have issues with Bitcoin's volatility, and what everyone learns in business school, whether it's MBA or, college business schools, is that volatility is risk, right? So they see the volatility of Bitcoin, they think, well, therefore it's very risky. And I couldn't disagree with that kind of thinking more. So in fact, I just literally tweeted this. As you were talking, I was looking up my tweet. So literally just like 2 hours ago, I tweeted, price volatility only equals risk in academia. Deleterious and or unpredictable monetary policy today and in the future is the real risk. So choose your money wisely. So what's risky is what we don't understand. Volatility isn't risk. Volatility is just something that the academics came up with in order to measure something, because you can measure beta. You can measure the beta of a stock. You can measure the beta of any asset. And if you call it risk, then that's a way to measure that in your portfolio. So is my portfolio risky? When people say that, what they mean is how much does it fluctuate? And I'm telling you that the real risk for real people like you and me and families all around us and people all around us, the real risk is losing your purchasing power over time. So we know that with the US dollar over time, it's literally programmed to depreciate over time. It's guaranteed that you will lose your purchasing power the longer you save in US dollars. Bitcoin is literally programmed, because of its scarcity, to appreciate in value over time and to increase your purchasing power over time. We know that its monetary policy is exactly what it is, right? A new set of Bitcoin gets delivered every 10 minutes or so. We know exactly how many are going to get delivered today on average, right? It can fluctuate slightly day to day, but we know basically what it's going to do. We know that about every 4 years or a little less, there's a halving cycle. We know that there only ever will be almost 21 million Bitcoin. All of those things are just like written in stone. They're hard coded. They're not going to change. We don't know anything about the monetary policy of the US dollar other than that they're probably going to print more at some point. They're acting like they're tightening right now, but we know that a recession is coming or some terrible conditions, and we know that the Fed's going to pivot and then they're going to turn the printer back on again. And QE4 is just going to just totally just put QE 1, 2, and 3 to shame based on its size. So the same thing applies to stocks too. So we think of these things as these kind of safe investments, but they're all based on the US dollar system. They're all based on this whole Keynesian economic experiment. So the bigger the company, the more likely they are able to borrow at a lower rate. That's how our government, how our markets reward the bigger companies. The more they can borrow, the bigger that they become. And so there's this virtuous cycle for them that they keep borrowing, they get bigger. The bigger they are, they can borrow more at a lower rate, and they just get bigger and bigger and bigger. And that's why we have $3 trillion, $2 trillion market cap companies, like the FANG stocks, for example. And so basically, if you can tap the public markets like these things can, they basically can't lose. They're too big to fail. They keep all the profits, but if they falter like the banks did back in 2007, 2008, 2009, the government comes in and backs them up. So the public pays for their losses, but the companies get to keep their gains. So that's the tragedy of the current system we're in. That's the system that is on the precipice right now. We're seeing cracks in the foundation right now of these currencies and of this system. So there gets to be a point where you have borrowed so much money that you can't possibly pay this back as a nation. And so the only way to do this, and we can get into this, but it's kind of esoteric, but basically the only way to pay it back, the only realistic way that a country will try to pay it back is by devaluing the currency, by debasing the currency. And so that's what we're in right now. The huge downside of this is great. That helps keep the government going for another year. The massive downside is prices go up. So we're seeing the prices of everything go up. It's called inflation, the devaluing of currency. So everything at the grocery store is way more expensive. Our houses that we own are more expensive. If you don't own a house, that's super unfortunate because your rent is going up now. It's going way up. Thing after thing after thing that's making life more expensive is also dropping the quality of life for people across the board, especially as you mentioned at the beginning of the show, what's left of the middle class and the lower income class. They are dying right now, right? They're working their minimum wage jobs, maybe 1, 2, or 3 jobs. They're barely surviving. Life was really hard about 6 months ago. Now it's freaky hard because everything that they could barely afford is now like 20, 30, 40% more expensive. So, man, I'm totally going off on a tangent right now, but that's how I feel about the current the world order and the current Keynesian economic system and these huge companies. Coming back to where we started, they're huge because of this system, and that won't go on forever. And at some point, that system breaks, and I think we're seeing cracks in the foundation right now.
No, that was a great answer, Jeff. Thank you for that. I guess going more bigger, broader macro view, I know Alex Gladstein wrote a book, Check Your Financial Privilege. While I haven't had a chance to read it, I know kind of the general principles of it because it's a lot of his previous articles that he's written on it. Mm-hmm. And I guess Bitcoiners were always thinking, while we do think micro and we do think macro a lot of the times in terms of it's a global money, how it can help third world countries, it can help the lower and middle class. It's a savings technology for you and your family for the long term. I guess maybe do you want to try and outline along with me if you need for we are very lucky to be, you and I know are both in the United States. And while we're seeing inflation prints of, they claim to be 8.5, I know you and I can argue that those are much, much higher than what we're just seeing just based on energy prices, housing prices, food prices alone. If you're just taking out everything else, those are probably 3 of the things that are most important to people. And we're seeing them much and higher than that 8.5%. So I guess what I'm trying to get at is, so while we're seeing 8.5 or supposed 8.5% in the United States, can you say like we are very beneficial to being the global reserve currency? And while places like Lebanon, Greece, Nigeria, and these countries abroad are seeing much higher inflation prints, and maybe explain to my audience why and how that is basically.
Yeah. So first of all, I rip on the US dollar all the time, but to be fair, the US dollar still is absolutely the strongest currency in the world. It is the prettiest crack house on the crack street, right? So it has tons of problems, but it's by far the strongest. So the things that we're all griping about right now, the 8.5% reported CPI, it's probably closer to 15 to 20% if you do it in constant terms. that's what a lot of these smaller nations are dealing with on a regular basis. We kind of look at this and like, oh, isn't this terrible? And it is terrible, but there are literally countries that deal with this year after year after year because of their monetary policies and fiscal policies of their countries. So where does that leave us? First, I mean, there's so many ways we can go with this. To Alex Gladstein's point, and I love Alex, by the way, he's doing just literally awesome work, and I highly commend him for what he does. I think it's awesome. His point is, and I completely agree with this, that people who live in these countries where their government fiat currencies are constantly faltering, where they're actually not only in high inflation, they sometimes go into hyperinflation. So they're depreciating at 50% per month. That's how fast they're losing their purchasing power. Those people, they get Bitcoin, right? They see that. We complain about, oh, it's volatile. It was down 20%, whatever in the last few months. Like, oh, isn't that terrible? I'm telling you, like, if you look over time, obviously it's gone up, several million % over time from way back at the beginning. But these people who are losing their purchasing power, they understand the idea of a stable currency. They understand the concept of a currency where you can't have crony people, crooks at the top who are controlling the money printer and who are governing them and who are stealing their purchasing power intentionally year after year after year. They just understand the importance of Bitcoin. They understand the importance of having a sound money. So I think that's awesome. And that's to my, and I'll sort of take a quick tangent here, but it goes with it. So the whole milkshake theory, the dollar milkshake theory, is the dollar is the strongest currency. There's hundreds of other smaller currencies underneath that that I think this decade are going to start going away. So one by one, we're going to see these currencies basically implode. They're going to hyperinflate. People are going to be desperate for a stable store of value. If they can buy property, that's great, but a lot of countries don't have they don't enjoy the same kind of property right laws that we do here in the US. So they can't really buy property. It's hard for them to buy hard assets. They need to find a stable currency. In the past, it's been the US dollar. But now Bitcoin is a viable alternative. It's a way to get out of this corrupt fiat system. And so one by one, these smaller countries, their purchasing power, I think, is going to get swallowed up by Bitcoin. It'll still go into the major currencies in the short term. But over time, it's just inevitable to me that a lot of that purchasing power is going to go into Bitcoin.
Yeah, I think that's a great explanation. And I guess I'll cap that off with one more point. There's a principle called the Trifflin dilemma, which means if you are the world reserve currency, you basically have to export your currency as like your main export in theory. And the way that we do that is we back energy still. I guess with Russia, this is potentially coming to an end with kicking them off the SWIFT system. But basically what we're doing is we say that everyone needs to price their oil in US dollars. In doing that, in order for them to buy oil and or natural gas, they need US dollars to purchase those. So we have to send them US dollars and they send us cheap goods in return. And the reason they're sending us cheap goods is to help them get cheaper oil and gas. Yep. And energy is ultimately what controls the entire world, I would say. So obviously with us kicking Russia off the SWIFT system, they have one of the largest oil reserves in the world. They've been trying to work with the Chinese or other countries because they still need oil. So Russia kind of has the upper hand while the US has a dollar, which is ultimately worthless when you need the energy. So that's kind of, I know many economists or ones that I like are saying that, in February of 2022, we're kind of watching the demise of the US dollar as we see it now, or the petrodollar as it's been called since the 70s. So I think that's a great way to cap it off. So going back to your Twitter, Jeff. So I know you've gotten some flack from the Bitcoin community, but nonetheless, I still love your takes because ultimately they've been right. And, if you're right, it's hard to disregard them. But this is a tweet that you had from yesterday. I don't trade Bitcoin, but here are my current thoughts regarding coming price action. Days, bullish rally from current oversold levels. Weeks, resumption of bearish trend. So I know many people do not like that. Q3 2022, approximate bullish. And then Q4 2022, you have no idea, or you put question marks. And then 2023 and beyond, wildly bullish. So can you take me through the logic of ultimately that? So we'll go with days, weeks, Q3, Q4, and then 2023 and beyond.
Sure. So I post tweets like that every once in a while because I think people get confused when I'm talking, because in my head I have this kind of time frame all played out. Everything sort of makes sense to me. But when I'm talking to people, they'll ask a question. It may be like about this segment right here. That's the part I'm answering. But what they don't understand is how I got there and then where we're going after that. So
They don't
thanks for
understand the
asking.
context. Yeah.
Exactly. It's all about context. It's all about the time that we're talking about. So first I start out, I said, I'm bullish in terms of days. So the coming days, why am I bullish? Because we are at massively oversold levels for basically all risk on assets in general. So Bitcoin has been hanging in there, by the way, and we'll get back to how I feel about that, but it's been hanging in there. It's been outperforming the stock market for this year. And that's actually pretty fantastic. There may be a drawback to that we'll get to later, but so risk on assets have been getting hammered. Tech stocks have been getting hammered. Amazon, Alphabet got hammered after they reported earnings. Lots of other countries, they're in deeply oversold territory. So I look at things like that. I look at kind of strength indices. I look at Bollinger Bands and volatility and ranges where equities normally trade, and for each asset, how they trade. A lot of those are basically reaching the lower limits. And for whatever reason, when they happen to hit these lower limits, they're usually due for a rebound, and we see a rebound. So I'm actually expecting heading into this week that a lot of these things have a nice little pop. It could be Bitcoin may, although it hasn't gone down that far, but things like Bitcoin miners have gotten hammered, even though Bitcoin itself has been kind of flatlining. Tech stocks, innovation, those sort of things, they may be due for a bit of a rebound. So that's how I feel about that. It's basically based on technical factors. Then I say after that, so in coming weeks, I'm still bearish. So bearish, I've been bearish, and everybody knows this. They call me Dr. Bear now. Last year I was Perma Bull. This year I'm Dr. Bear. I've been bearish since the early January, and I keep telling people, like, it's been the right call, right? The markets are down. Like, we're in a bear market. Like, so
that's why I love your takes, Jeff. It's hard to get hate when you're right. You know,
I know,
like
you can make fun of me and call me terrible or whatever and say I'm bad for Bitcoin, but I'm just telling you what I see, and that's what I see. So anyway, the NASDAQ's down like 22% or so. I think the S&P 500 is down about 13% or so year to date, or since their peak. So NASDAQ peaked in mid-November. S&P, I think, was late December or so. Anyway, so they're all down. Everything's just down. Small caps are down. We are in a bear market until proven otherwise. The momentum is clearly down. A lot of institutional level investors and traders use things called moving averages. So 50-day, 100-day, 200-day moving average is a real common thing. All of these are clearly in a downtrend. We're seeing a series of lower highs and lower lows. So it's going zigzagging down. That's just a bearish trend. It just is what it is. You can hate it, you can deny it, you can fight it, but it is what it is. I think of investing a lot of times, and especially from a macro standpoint, as surfing. I've used this analogy before. You're waiting for a wave to come in. When you have a huge macro wave, especially a powerful one like we have now, where it's just decidedly bearish, right? So I was telling people back in January that I think we peaked in GDP terms in the fourth quarter of 2021. We just finally got our print for Q1. We had a negative 1.4 GDP. So we're actually having a decelerating GDP right now. That's not good. And that's what I was telling people, like, we're going to have this. When we have that, and if we have high inflation that then rolls over and starts to disinflate, that combination of things is terrible for risk on assets. So I keep telling people, be prepared for risk on assets, and that includes growth stocks, innovation stocks, small cap stocks. Bitcoin, unfortunately, is still considered that by the majority of market participants. They still don't understand it for being just simply better money. It's the world's ultimate safe haven asset. They think of it like a small tech stock. So that's how it behaves. It's basically almost a one-to-one correlation with the NASDAQ and with small cap stocks. When people are scared, they sell everything, and including Bitcoin and including altcoins and stuff. So, man, I'm digressing a lot. So it's still bearish. So even if we have a bit of a relief rally in the coming days, I think then the bear market trend resumes unless it breaks. So I always tell people I reserve the right to change my mind if we break out of this bearish momentum, and my indicators tell me that we've probably bottomed and now we're moving higher. Then I'll be like, we're back on green light, go, like, start investing again. We are back in a bullish trend. I'll be the first guy out there, and then people will start calling me Perma Bull again. And I'll be okay with that.
We'll have parties when Dr. Jeff changes his opinion. We'll go nuts.
Exactly. So regarding Bitcoin, here's the thing I've been concerned about. And again, I've been saying this for a couple months. And for the people who are 100% all in and they just absolutely need to have Bitcoin go up in price, I feel bad for those kind of people, right? Like if that's how you feel, you probably are a little bit over invested in it, and maybe you should chill out a little bit and take a little bit off the table. If you're just panicking, if you think the price is going to go down, you're probably over invested. If you're like the rest of most people, you should want Bitcoin to go down, right? Because you can buy more sats for the same dollar. So you should be happy every time it goes down to buy more, because you know that in the long term, if it's going to be here eventually and we're over here, you should love it when it goes down like this, because you can like have a way better projection to get back up to here eventually. So anyways, that's how I feel about that. I talk about the example of we're in a very similar macro setup as we were in the fourth quarter of 2018. And I apologize for everybody who's heard me say this, because I've been saying this a lot, but I think we're in a very similar situation. What happened in the fourth quarter of 2018, think back to the end of 2017, Bitcoin had peaked in December to just under $20,000. Then that year, it kind of squiggled all the way down to about $6,500 by mid-September of 2018. And then what did it do? It basically, all the volatility came in and it just flatlined, and it went basically flat sideways for like 2 straight months. And people are like, what is this? Is it over? Is it dead? What's it doing? You know, they're like poking it, trying to figure out what to do. Nobody wanted to buy it. Nobody wanted to sell it. They just didn't know what was going to go on. Conditions were bad. Macro was bad. The stock market was grinding lower. And then mid-November, Bitcoin just decided like, I can't take it anymore, and bloop, and it went down, and it went down 50% in about a month. And that just like wrecked people, right? And so people were so terrified. Everybody was hitting sell. Everybody was panicking. There was a lot of leverage on at the time. So leverage longs got liquidated. I call it a leverage long liquidation cascade, LLLC. That happened then because there was so much leverage. So selling begets selling. People get margin called. They get forced to sell because they're the place that where they're holding it and where they're borrowing money to buy it. They just say, that's ours. Sorry, we're taking it from you, and you're done. You're wiped out. That happens, and that's why we get these massive, really fast acting plummets in price. That was an awesome buying opportunity, right? So it plummeted down. It fell down into like the 3,500s or somewhere around there, 3,200 something. That was like a monumental buying opportunity. That's why I actually hope something like this happens. That's why when we fast forward to today and I see the price, the volatility is kind of coming out of Bitcoin. It's going sideways. It's just barely moving up and down. We've been hovering around 40,000 for like 2 months straight now. It's possible that we have the same kind of thing where it's just kind of floating along and then it just goes bloop and drops again. People ask me, do I have price targets? I don't have price targets, but I do know that it fell 50% in March of 2020. It fell 50% in 2018. If it fell 50%, that would put us at about $20,000. That would be a back up the truck kind of moment. You back up the truck, you buy as much as you can. You sell your chairs, you sell your lamps, your lava lamp, you sell your kidney if you want. I'll help take out your kidney in my garage if you want. You can sell that on the black market. Totally kidding about that, by the way. But you know, that's like a back up the truck kind of moment where the gains you will make going forward are too good to pass up. Now, most people don't make those purchases because they're the ones panicking. They're hitting sell because they're watching their net worth go down. They were told Bitcoin only goes up and it's going down really fast, and I'm panicking. And so they hit their fight or flight responses on. I always tell people you got to do the opposite of what your emotions are telling you. If you're panicking and you feel like you should sell because you think you're going to die, you should actually be buying at that point. When there's blood on the streets, that's when you buy. So could that happen? Yes. Is it probable? Kind of. I think there's still a chance that could happen. How could I be wrong? The main reason why I think I could be wrong in this, and Will Clemente was the first person to bring this up to me on his show a couple of weeks ago. There's not a lot of leverage out there right now. We don't have very many leverage longs. So it would be unusual for a leverage long liquidation cascade to happen right now, because that's when you see those vertical drops. It's more likely that we'll have kind of a grind lower because there's not a lot of leverage to make it drop precipitously like that. It's possible because there's a lot of leverage in the stock market that people could get margin called in the stock market and they would have to liquidate their Bitcoin holdings to make good on those bets. We'll see. So those are my thoughts. Could we grind lower? Yes. Is it probable that we go lower from here? Yes, because the macro is still bearish, but at some point we're going to bottom. I hope the bottom comes in May. The stuff that I look at is kind of pointing to a May bottom, could be June, hopefully May. I just want to get it over with because I want to buy back in size. And then I think the third quarter is going to look pretty good from there.
That's a great explanation, Jeff. I guess, and I guess I want to clarify, because I know you've mentioned this multiple times on podcasts, that I know you personally, so I'll differentiate what you do personally. You're just kind of, I know you said you buy in HODL, stack DCA, whatever, and that's what you recommend for the general public. Mm-hmm. But I know I know in your fund, I know you've said you actually don't sell Bitcoin in your fund, but you will Correct. Short Bitcoin-like assets. So can you take it through just an explanation of what you do when you're looking to short Bitcoin, or when you're deciding to go more leverage long on it as well?
Sure. So when I'm feeling bearish on the price of Bitcoin, first of all, to be very clear, I don't sell Bitcoin, and I don't short Bitcoin, and I don't recommend that anybody does that individually or in a fund. You can do what you want. It's a free country, but I don't do that just on principle. When I'm feeling bearish on the price of Bitcoin, I love to short Ethereum. I love to short crypto exchanges, the casinos. So no offense to them, sort of, but like Coinbase, I'll short, and other things like that, because they also have a high beta. So if Bitcoin drops like 50%, those things will drop 80%. I have shorted Bitcoin miners in the past. It's nothing against them. I actually love Bitcoin miners. I love private miners more than I love public miners, but I'm still a big fan of the miners. I plan on going long on lots of miners once I feel like we've bottomed, and stay long for a very long time, hopefully, ideally forever. But so yeah, that's how I do that. So if I'm concerned about it, what I mostly do to play my downside concerns, because I think of it all in terms of risk on assets and risk off assets, and which environment are we in. If I'm concerned about a drop like I am now, what I really short is, I love shorting the S&P 500, the NASDAQ, small cap stocks, short innovation stocks. And then my favorite thing in the very short term is I'll go long volatility. And there are ways to do that in the stock market too. That has a fantastic correlation with Bitcoin. Usually if Bitcoin is plummeting, volatility is screaming higher. And so you can kind of hedge against your downside on Bitcoin by owning volatility.
Yeah. I want to go into probably like one more chart. It was posted by Jürgen Timmer is his name. I don't know if you had a chance to see this chart, but it was a fantastic chart. I believe Preston mentioned it. Can you see it right now, Jeff?
I can, yeah.
Yeah, so I think that this is a great chart, and this is actually showing from January of 2020 through present day. And obviously Fidelity, I know Jeff knows this, and Bitcoin Magazine has been talking about this. They have a digital asset group, but and we were kind of leery about that, thinking that they were lumping all crypto assets. But basically, when we heard a bunch of them talk, they're like, Bitcoin's like the apex predator, and kind of saying a lot of the talking points that I'd say Michael Saylor and a lot of the Bitcoin bulls were saying, how they're Bitcoin only. And obviously they're trying to pair up with MicroStrategy to start allowing people in their 401ks to buy Bitcoin. I know the spot ETF has been shut down multiple times. I'm not really sure the reasoning behind the SEC's logic of that, but obviously they're trying to work with MicroStrategy to get it for MicroStrategy and or Fidelity clients. But I think this is great research that they posted. It shows different assets, the S&P 500, non-profitable tech they put as a category, tech, European banks, IPOs, and SPACs. And I think that this is a really great chart. I guess, Jeff, do you have any comments on this chart or anything you want to differentiate or note on this?
Well, I love it. I mean, if you can keep going back year after year and what you'll see. So Bitcoin's obviously on top, which I love to see. And if you go back another year and 2 more years and 3 more years, Bitcoin would just get further and further away from all of those other, all those other assets underneath there. So that's what I'm talking about when they say everyone is, people who are skeptical of Bitcoin, they're concerned about the volatility of Bitcoin. I say, yes, it's volatile, but it's more volatile to the upside over time. So it's actually foolish to not own some. If you're very concerned about the volatility of Bitcoin, then just have a small allocation to it. Own, put 1% of your portfolio, 2% of your portfolio. If you can deal with the volatility, look at these gains and look at how you outperform every other asset class. So to me, it's just kind of a no-brainer, but you have to get over the volatility precipice. And so many people get stuck on that issue. I look forward to the day when they don't. But at the same time, when people are finally over that and Bitcoin isn't as volatile, it'll probably be 100x larger than it is today. That's when it will start getting less volatile. And then we're not going to have these incredible gains like we do currently. We'll still have gains, but they won't be anything like what we're seeing today.
Yeah, I think that's a great point. So but before I let you go, Jeff, thank you so much for coming on. I've got 2 more questions at the end, and then I'll let you say where
Sounds
people
good.
can find you. So I guess, what has been your biggest investment or business mistake? I'll kind of separate it out because I know you have investments yourself, and then you also have a business. So if you want to say one of each for the audience.
Oh man, okay. Biggest investment mistake. Well, I actually told you my biggest investment mistake was what I did back in 2017. I got sucked into the altcoin circus. And I saw, wow, Bitcoin is awesome, but look at how much more awesome and shiny are these other altcoins. And I'm going to swap all of my Bitcoin out and put it into these other things. And I got personally, I say I got wrecked. It wasn't terrible actually, but I did learn a very powerful lesson. There's no greater opportunity cost in all of finance than to not own Bitcoin. So I'm just telling you guys, like, you have to own some Bitcoin for the long term, or you will get wrecked. And I truly mean that. You will get wrecked over time if you continue to stay in the fiat system, which is clearly in its final days and is clearly it's starting to implode. We're seeing signs. If you don't understand that, at least take the possibility into consideration that maybe I'm right a little bit, and just own a little bit of Bitcoin, and it literally will be insurance against this whole fiat system collapse that is, I think, coming. So that's my biggest investment mistake. Biggest business mistake. Well, it's kind of funny. When I first started Vailshire back in 2014 in January, I had no clients. I had $120,000 of my own money I'd saved up from being a doctor. And I literally just like flipped the sign over and said, open for business. And I went like 8 months with no clients. And I had imagined that I was just going to just instantly be successful and take off. Like I said, I had a following on Motley Fool and Seeking Alpha. Lots of people thought I was a great investor, blah, blah, wanted to invest with me. But when I actually started the business, I learned that you still have to be a salesman. And I'm a terrible salesman. I'm just literally the worst salesman ever, because I just don't want to sell people a product ever. I want them to want to come to me and want me to manage their money because they trust me and like me. But I don't ever want to feel like I'm putting pressure on people to do that. So what I learned in my biggest business mistake is you have to be, it is very hard to grow a business without sales. And so you can hate sales like I do, and that just means you're going to struggle for a much longer time. So it took me a lot longer to get off the ground, for Vailshire to get off the ground. Thankfully, it has. So I thought it was going to be about 3 years by the time I could retire from medicine. It was about 8 years, 5 years longer. But hey, I'm that much the wiser for it. I've made a lot of mistakes. Thankfully, I'm kind of humble enough that I've learned from my mistakes. I recognize the mistakes and try to not make them a second time. So yeah, so don't overestimate your business. If you have a side business, don't overestimate how quickly you'll be successful, because it usually takes a lot longer than you think it's going to take.
I think that's a great explanation. I guess, what's your favorite book, podcast, YouTube channel, or website? I normally ask this as a question and people answer for each one of those things. You can give one or you can give multiple. I'll leave it up to you.
Oh man, Bitcoin related?
Yeah. I mean, you can do investing, but I normally just keep it Bitcoin related for my Bitcoin guests.
Yeah, sure. So, I'm really partial to Preston Pish, just because we come from we're actually kind of similar age. We both came as value investors in the Warren Buffett style stock picker kind of guys who both found Bitcoin, fell down the rabbit hole, and now are just sort of gaga-eyed about Bitcoin and love to tell people about it. So I would say Preston's podcast is my favorite Bitcoin resource.
Yeah, I love Preston as well. I have a lot of respect for him and all that. Thank you once again so much, Jeff, for coming on. Where can people find you? Where can people find Vailshire Capital and more information about you?
Sure. So if you want to know about Vailshire's investment services, I run a hedge fund, and then I also, manage separately managed accounts, RIAs. Through my RIA, I manage IRAs as well as taxable brokerage accounts. Just email me, info@vailshire.com, or just go to the website, vailshire.com. And then if you want to find me personally, I'm always on Twitter at Vailshire Cap. You can find me, and I do spaces all the time. So I'm always having conversations like this. Love to talk to people about Bitcoin, love to talk about macro, investing, even health. I like talking about that too. So if you want to talk about any of those things, look me up.
Thanks so much, Jeff. Thanks everyone for listening. I'll talk to you later.
Thanks,
Bye.
Chris.